Well, good afternoon to you all. Thank you for being here. My name is Paulo Sotero. I am the director of the Brazil Institute at the Wilson Center. And you are at the inaugural event of a series that we started at the Wilson Center. We launched it just recently called the Wilson Center on the Hill. It was made possible by a grant by the Hewlett Foundation. The idea is to bring the issues that of public policy that we debate at the Wilson Center to the Hill, to the policymakers here, to the members of their staff. This new initiative is headed by David Klaus, who has done this activity and actually including leading congressional visit. Members of Congress went to Brazil in 2006. We are going to have this sort of event very frequently, actually next week. At the exact same time, 1 week from today, we'll have an event titled Feeding the World, the U.S. Role in Solving the Global Food Crisis. We have Bruce Stokes from the National Journal, Sandra Pawlowski from the Carnegie Endowment, and Kim Elliott from the Center for Global Development. Just a brief advertising on the Wilson Center. As you know, it's an institution that celebrates the 28th President of the United States, and we have 22 programs there, and the whole idea is to debate public policies. In the case of the Brazil Institute, to debate policies that are relevant to Brazil, to expand the understanding of Brazilian issues in this town, and also issues of relevance to Brazil-U.S. relations. I would like to extend a special welcome to the Ambassador of Brazil to the United States, Antônio de Aguiar Patriota, who has joined us for this first Wilson Center on the Hill focusing Brazil. And we are going to do this in the space of the next hour. Let me also recognize here my colleague Kent Hughes from the program on science and technology and global economy, who is also the person who initiated with David this program. Today we have Brazil as an emerging economic power, and we have three wonderful speakers. Lisa Schneller from Standard & Poor's was the person who actually took the lead and doing something that we had waited for many, many years in Brazil. And as a former correspondent who spent 11 years covering the negotiations of the Brazilian debt crisis, I thought it would never come. In April, Lisa, on behalf of her firm, Standard & Poor's, upgraded Brazil to investment grade. This decision has been confirmed since by other rating agencies. You have their bios, Lisa's bios, and the other speakers in this flyer, the announcement. Nancy Lee is an economist with the Center for Global Development, also a senior official in the Treasury Department dealing with Latin America, currently on leave, and working there at the Center for Global Development. Also, we will hear from Otaviano Canuto, economist, professor of economics from the University of São Paulo, international secretary for the finance ministry under first administration of President Lula, former executive director of Brazil at the World Bank, and currently a vice president for countries at the Inter-American Development Bank. So we'll start by hearing from Lisa for about 12 minutes and go from there. Thank you.
Thank you, Paolo, and the Wilson Center. It's an honor to be here. You have some slides that I put together, more than a few. And what we decided to do is put some slides up front that I'll be talking more from. But there's a rich set of slides remaining with data, et cetera, that elaborate on the points that I'll be talking about. And one of the first slides, it's very important to highlight what a rating is and what a rating is not. And as Paolo mentioned, we, Standard & Poor's, raised Brazil's credit rating on April 30th to what's called investment grade. And I think beginning from the onset, I am currently the primary analyst for Brazil. I have been for a while, and we have a transition going on where I'll be moving to a backup role and a colleague will be taking on as we have rotation requirements at S&P. But while I am currently sort of the primary analyst, all our decisions are committee decisions. This is a Standard & Poor's decision. This is not my decision. It's a group process, and we have a set methodology. It's outlined somewhat in the slides, and I'd be happy to talk about that more in detail. But again, what are we doing is we're giving what is a rating. It's our opinion, Standard & Poor's opinion, on, in this case, a government's willingness and ability to pay its debt on time and in full. That is what we're saying with our letter designation now of BBB- for Brazil's borrowing in foreign currency. Similarly, for its borrowing in its own currency, there's a separate rating, which is BBB+, that is several notches higher, as we call it, notches on our rating scale, that is also investment grade. These ratings that I'm referring to are globally comparable, so you can compare Brazil's BBB- rating with a French company's rating, with an Italian bank's rating, with a Chinese bank's rating on our global scale. They're forward-looking, our view on ability and willingness to pay, in this case, the government's ability and willingness to pay its debt. The idea is to look through cycles. This is not an assessment just for today, for next month, et cetera. It's several-year time horizon, and therefore our job is to take a stance on kind of seeing through political cycles, be it commodity price cycles, economic cycles, et cetera. Our ratings are not an investment ranking, a prediction of volatility of a security. They're not a recommendation to buy or sell a security. They're our opinion on if we're looking at an evaluation of creditworthiness across the scale, and investors use that as a tool in their decision analysis. I guess it's slide 4 would be prospects for investment grade. So in essence, what is investment grade? It's by market convention, BBB-, the letters that we have, and above. But our rating scale extends all the way up to AAA at the very top level, and obviously then we have in the speculative grade category, which is what we call non-investment grade, from BB+ down to default. So there's a range. And Brazil's moving to investment grade, so to speak, by market convention is indeed a milestone. For Brazil, it would be a milestone for many countries. Of the 119 countries that we rate, 25 of those are in Latin America and the Caribbean. 8 of the 25 that are in Latin America and the Caribbean are investment grade. Of those 8, 3 are Latin America. Chile with the highest rating of A+, Mexico with BBB+, and now Brazil with BBB-. There's a small group within Latin America that have crossed, that are currently investment grade. And making that transition is something that we think long and hard about, because what we're saying is that there's a greater degree of certainty about a government's ability and commitment, the willingness component, to pay its debt on time and in full. As we've rated sovereigns, Standard & Poor's started rating sovereigns in 1975. Our rating, the number of ratings we've done has increased quite a bit, okay? But over that time period, Only 14 sovereigns that we have actually raised from speculative grade to investment grade. Okay, 14 have made that transition over from BB plus to BBB minus. Some have gone the other way. We have downgraded 9 from investment grade to speculative grade. Some were downgraded and then moved back up, but some have stayed in speculative grade category. And within Latin America, 2 of those countries that were investment grade in the past that are no longer investment grade are Colombia and Uruguay. All of this to say is a key component of investment grade is a commitment to pragmatic, prudent policy. And our ratings upgrade assumes that the government of Brazil and the next government and the next government maintain that commitment. That's an important underlying assumption. Government policy stance, as well as obviously the performance of economic indicators, are key underpinnings. With investment grade, there's a broader set of investors, financial investors, pension funds, et cetera, that now can access Brazil's government securities. And hence that brings with it, over time benefits for liquidity, pricing, et cetera, of its assets. And hence why the financial markets focus on this very much. Looking at Brazil's credit profile, we have seen a strong improvement over the past 5-6 years. And S&P has followed with 8 consecutive positive rating actions, the first of which began in May 2003, a number of months after President Lula took office. Prior to that, there was an important financial market crisis and questions in the marketplace about the outlook for Brazil's economy, for policy. What has been key underlying these subsequent 8 ratings improvements that have culminated in investment grade on April 30th is a pragmatic policy commitment. Through changes in government. And this is something that we assume will continue, but given the track record that we've seen. And this is something that weighed very heavily in all of our actions, and certainly moving to investment grade, where changes in governments, you have had a commitment on balance for pragmatic, not perfect, but pragmatic policy decisions. Fiscal accounts that do present some, in the current context, their expansionary fiscal policy certainly feeds into the economic activity outlook that we have for Brazil. But we're talking about debt levels, a commitment that has brought down debt to GDP, a key indicator that we look at over the past 5 years, after it increased importantly during this crisis, 2001, 2002. And that's a commitment. The structure of Brazil's fiscal system is that it is a commitment that is actually shared by the central government and the states and government-owned enterprises. And that the construct of that, which has foundations in debt renegotiation agreements with the states, a fiscal responsibility law, preserving their spirit is very important for Brazil's rating and rating prospects. Monetary policy has been pragmatic. You have an operationally independent central bank, not formally independent in that the president can recall directors at a decision, and hence there's uncertainty there as opposed to other countries where there are set limits. Ideally speaking, with time, Brazil's rating could be enhanced. All other things equal, policies going in the right direction, et cetera, with formal independence. But what is important for us is the fact that the central bank has acted independently. And we all know that taking difficult interest rate policy decisions is not something that politicians anywhere like to see. And there certainly has been, and there will be criticism in Brazil. But you have seen in the end backing by the government, and I say government broadly, for the ability of the central bank to take these difficult decisions, and we assume that continues. exchange rate is a floating exchange rate regime, and this combination of policies provides an important foundation for all the progress that we've seen in the past 5 years, which includes a decline in Brazil's fiscal and external vulnerabilities, debt down from 60% of GDP down to the high 40s. It is still high, and that's a credit weakness, which I'll come back to, but it's improved. And the interest costs of the debt, while still high, they are improved. The composition of Brazil's debt, and these are key things that we look at, is also improved. The external vulnerabilities are dramatically different today than they were 5-6 years ago, and that's a key factor that has underpinned our decisions over the years. If you put these things together, pragmatic policy commitment, decline in key vulnerability indicators, they have fostered a stronger outlook for economic growth in Brazil. Brazil's not going to grow at the rate of the other BRICS, Brazil, Russia, India, China, okay? That's not our forecast, and more structural improvements, passage of reforms in Brazil would be important to contribute to that, a stronger economic outlook. But the outlook today is stronger than it has been in the past because of policy stability and improvement in these key indicators. In addition, there's an important deepening of Brazil's local capital markets that has been going underway over the past number of years. You've seen credit to GDP grow at a strong clip, over 20%, 22% or so on the average for the last 4 years. It closed last year near 30. It's been growing this year so far at 30%. This is creating, that's backed by, obviously, the macro stability, but also improved access to collateral, et cetera. You have different microeconomic laws put in place, corporate governance laws, the ability to do certain types of transactions, bankruptcy legislation that in 2001, 2, 3, 4 have actually enhanced the micro foundations for more of a blossoming in the capital markets that you've been seeing with macro stability. This feeds into our assessment that the outlook for investment and growth is stronger today than it has been in the past. You've seen a strong wave of IPOs over the past number of years. They're at a halt this year, partly for global reasons. But firms are accessing different types of credit, and this is very important to the investment and growth prospects. That is a key factor in our more positive medium-term outlook. Again, any rating has supporting factors and constraining factors, and the constraining factors on Brazil certainly remain the level of its government debt and budgetary inflexibilities. Some of the charts that you show, if you compare Brazil debt at 47% of GDP with other countries in this low investment grade category, the first move to investment grade, it's more than double that of other countries. Therefore, how can we have an investment grade rating? One, a rating is a mix of factors and different supports and constraints. We also have other countries with higher levels of debt in investment grade. And it's our call that the economic outlook plus the policy pragmatism support, plus obviously the improved composition of this debt, support the outlook for improve our confidence on the ability and willingness of the government to pay its debt. Wanting to finish up with talking about in terms of a little bit more on the growth outlook, I think that I have some charts on here to highlight that at the beginning. Brazil has been known for key corporates globally in terms that are top-tier corporates that have always tapped the global capital markets, that attest to some of the strengths of Brazil's private sector. And we rate number of corporates higher than the government of Brazil. That is permitted by our methodology, but obviously any company that's rated higher than the government in the country in which it operates needs to have key characteristics that make us comfortable with their ability to pay, even if the government of Brazil is in a default scenario. but there are a number of Brazilian companies that we feel that way about, given their inherent strengths. However, Brazil's economy being broad and complex, until more recently, there's been, and there still is, extremely high levels of informality. Where you have this mix of extremely sophisticated corporations, et cetera, who are very well known globally, key global players, but there's obviously a lot of poverty and inequality in Brazil. And what we've been seeing is under this pragmatic policy commitment, of course, the favorable global climate that has facilitated that over the past number of years until most recently, you've seen that a broadening of the foundation for growth in Brazil, where the domestic demand has taken on and has been leading growth, and we expect it to lead growth over the next several years. And part of that is at the lower income levels in Brazil, real incomes are growing more like, quote, Chinese rates of growth. In the poorer regions, at the poorer income levels, that is stemming from a commitment to low level of inflation, which is key and remains key as we are in a world right now of pressure and upward pressure on inflation, energy prices, food prices. But you've seen an important commitment from this government, which is important to continue, and the benefits of that is higher rates of real income growth at the lower income levels, formalization. It's not that more jobs are being created, but more jobs are being created in the formal sector. That has implications for Brazil's fiscal dynamics over time. Tax revenues have been extremely buoyant, and part of that is formalization. In addition, the companies have become formal, and their growing consumer market is one of the areas that is attracting FDI, besides just domestic investment. FDI has been buoyant over the past year, very strong, and a key factor that makes us feel comfortable with our upgrade despite the global environment, and that's being attracted to the agro-industry sector, energy. We all know there have been important recent oil finds in Brazil, the ethanol industry, et cetera. The FDI has a broad base in Brazil. It's going to large companies as well as small companies. All of this to say, thinking of Brazil's economics moving forward, we see a stronger outlook for growth in Brazil under macro stability and pragmatic policy than we have in the past.
Thank you very much, Lisa. We'll now hear from Nancy Lee. Nancy.
Thanks very much. Excuse me. Thanks very much, Paolo, and the Wilson Center. It's a pleasure to participate in this discussion today. It's a pleasure to share a panel with Ottaviano and Lisa, whose views I've learned to respect very highly in the years that I've known them. In its broadest form, the issue that we're really discussing today goes beyond the decision to rate Brazil as an investment-grade country. The issue is really, is Brazil now in a new economic era? Is it on a new growth path? Does it have a new growth strategy? Is there, in effect, no turning back? I think the answer to that question is what I would say is a partial yes. For a certain subset of fundamentals, Brazil has really achieved a quantum leap forward in government capacity and in the economic environment. For some of the factors that Lisa was mentioning, monetary policy and inflation, domestic debt and reserve management, the achievements over the past 5 years have been impressive, and I think they will be durable. Let me mention two other factors which I think are critical for the future. One is the general openness of the Brazilian economy, which has increased very rapidly, which we know is important for countries that are trying to achieve sustained growth. And the other is a much better system in certain areas of poverty reduction, particularly transfers to the poor, means-tested transfers to the poor, the Bolsa Familia program, which I think through its effect on poverty will also be critical in growth rates going forward. That being said, there are other fundamentals where the picture is not so bright, and we know that storm clouds are gathering in the global economy. We're in a period where there's considerable uncertainty about global growth, and we're certainly in a period where inflation is accelerating. So the period ahead will test the resolve of Brazil's monetary and fiscal policies, fiscal authorities. And I think in particular it will expose the high costs of slower progress on what might be called supply-side policies, some of the policies that Lisa was mentioning, essentially the environment for investment, both in physical capital and in human capital. In the brief time I have, I want to just address a couple of questions and then maybe make some points about the policy priorities going forward. First question is, how much of a worry is inflation in Brazil at the moment, given Brazil's relatively good performance on inflation? The answer is it's a big worry. We are in a period where Brazil, like a lot of emerging economies and advanced economies for that matter, is experiencing sort of a perfect storm of inflationary forces. There is the commodity price shock. There are increasingly binding supply constraints. Brazil's capacity utilization rates are very high now, and there is the risk of overheating domestic demand. All three are really converging to push up prices. So what the monetary authorities do now and in the period ahead is going to be critical. It's not clear so far how much help the monetary authorities will get on the fiscal side. We've just seen an announcement that the primary surplus will be increased by 0.5 percentage point of GDP, but that actually doesn't represent much of a fiscal tightening because that's where it's been running for recent months, actually even higher than that. There's also been this announcement of a new Brazilian investment fund, which some people think of as a stabilization fund or a sovereign wealth fund. And clarity on what that fund will do will be critical, I think, for inflationary expectation. The question in people's minds is it going to be used as a fiscal savings vehicle, which I think would be very beneficial for inflationary expectations, or is it going to be used as a vehicle to intervene in exchange markets and, in effect, have another intervening force apart from the central bank, which I think would be people would view with a little bit more concern. But there are two things I wanted to point out that I think position Brazil very well for fighting inflation going forward. One is the central bank has spent the last 5 years honing its exchange rate management policy. And Brazil's exchange rate management has had a bigger dose of flexibility than some of its other peers. And I think that flexibility is now standing in good stead. It may be that the rest of the BRICS are growing faster, but Brazil is the star performer on inflation. Brazil's inflation rate now is about 5.5%. Russia's is maybe 15%, and China and India's are up in the 8 to 9% range. So Brazil goes into this difficult period better placed. The other thing is that Brazil does have Bolsa Familia, and Bolsa Familia is going to help Brazil target support for the poor to maintain their purchasing power in the face of this commodity price surge, and particularly food price surges. They have a mechanism already in place to target subsidies, so they aren't compelled to provide generalized subsidies that, to people who don't really need them, which waste fiscal resources. So I think those two things together are very important, but of course, support for the central bank as it does its job is very important. Brazil's growth path. How high and how sustained will Brazil's growth path be going forward? I think if you're talking about a 4 to 5% growth path, I think that's a very credible and probable path for Brazil. I think the evidence suggests that that is likely going forward, borrowing a very steep decline in global growth. Why? Because there are a lot of self-reinforcing forces now in Brazil's growth. It is domestic demand driven. It isn't entirely dependent on commodity prices. The middle class is increasing very rapidly in Brazil. By some measures, the middle class in Brazil now counts for 46% of the population. That's a huge increase in a very short period of time. And the middle class brings a whole new set of demands for goods and services that will help sustain growth. And the other thing is that the financial sector in Brazil is now finally focused on the private sector and not on lending to the government. And so you're seeing credit growth very rapid, which will help to sustain both consumption and investment. But if you're talking about 7% growth, the sort of BRICS rate of growth, and that, by the way, is the rate of growth that's defined as high growth in the recent Commission for Growth and Development, this prominent group of economists and policymakers that have just issued their report. I think the argument on that is less strong. That report suggested a number of sort of common features of successful growth strategies. One is investment rates, the ratio of investment to GDP of 25% or more. And another is infrastructure spending ratios relative to GDP of 5 to 7%. And that's where Brazil really has a ways to go. To be fair, Brazil's investment rate is actually increasing very rapidly. It was 17.9% in 2007. That's up more than a point in a year. But there is a long way to go. And the microeconomic environment for investment in Brazil is still very problematic. And to me, that is an area where a lot more focus at this particular point in time would be a very sensible thing to do. I'm talking about things like the World Bank Ease of Doing Business indicator. Brazil's rank is 122. That's not a rank that a country as important and as big and as crucial for the global economy should have. Finally, in this whole context, what are the right policy priorities? Policy priority number one for Brazil now, I think most people would agree, is to avoid overburdening monetary policy and let the central bank fight inflation. They're going to have to focus single-mindedly on that goal in the days ahead. That means they're going to need some help on the fiscal side, and it may mean they'll need some political protection as they will likely continue to use exchange rate appreciation as one very important inflation-fighting tool. The second is focus on the supply side. In an environment where the headwinds to growth are intensifying and where inflation is rising, it makes a lot of sense to try to do the things on the supply side, particularly the environment for investment that will get you better growth, even as you have to be less stimulative on the demand side. So that means the legal environment, the regulatory environment, and the business tax environment. Brazil does have a tendency to put off fundamental reform and instead take ad hoc measures like tax breaks and special access to credit and subsidies to benefit favored firms and sectors. I think now is the time for a more fundamental approach, a sort of positive shock to the investment climate that can help sustain growth even during this difficult period. And then the final thing is I think it would be good for Brazil in particular to refocus on economically meaningful regional integration. Like the large countries of Europe and East Asia, Brazil has a huge stake in successful regional integration. We know from the experience of those other regions that regional integration matters a lot for growth and it matters a lot for income convergence. The region as a whole, and I'm including the United States in this, ought to start thinking of integration in broader terms than simply trade. The focus should be on the kinds of things that are most important in constraining growth in the region, and I think the investment climate is a widespread issue for the region. So I think a shared strategy in that regard would be a benefit to all of the country, or most of the countries of the region. We at the Center for Global Development are working on an idea for a regional investment agreement, which would be a very practical way to set standards for the investment climate using newly available data measuring investment climate standards in a very objective way consistent across countries. These are databases from the World Bank and other places, and they provide the opportunity to set standards for the investment climate in the same way that countries have long set standards for the trade environment through trade agreements. Brazil, of course, has a critical role to play in the regional integration process. So Brazil's view on this model or other models, I think, will be critical to the success of any strategy. There is a paper that is on the table coming in, so I suggest that if you're interested, you can look at it. Certainly, there's a lot more information on the Center for Global Development website. So, and I hope you'll take a look. But to close, I think Brazil, as I've said, can benefit at this stage substantially from a focus on supply side, and I think it has a critical leadership role to play on developing new models for regional integration that start addressing some of the binding constraints on growth that the region is confronting. Thanks very much.
Thank you, Nancy, very much. I will now like to invite Ottaviano Canuto to speak.
Thanks, Paul, everybody. Good afternoon. It's obviously, as well, a great pleasure for me and an honor to be here with such a good company in a panel. I will try not to be redundant. I would say that if I could select three key messages that I'd like to state clearly as possible. First, the newly acquired investment-grade status of Brazil reflects principally an institutional evolution, one in which stability has shown to generate important economic dividends. And I will quote Lisa in that regard. Second key message that I would like to stress is that the investment-grade status is not the end of a process. It's simply an intermediate stage of a continuous process. Because, as Lisa explained quite well, the ratings refer to perceived probabilities of default. They reflect both ability to pay indicators and willingness to pay. But there is a scale, a gradual scale. There is granularity. So, of course, the qualitative change from to the investment grade status matters, but it's a stage in the process. We should keep it in mind and not allow the over-optimism to lead us to some kind of complacency with respect to the challenge. And the third key message, of course, has been already stressed by both Nancy and Lisa. The prospects are good, but there are some headwinds that should be taken into account. But first of all, a couple of remarks on the implications of the investment grade status, which are quite positive. First of all, the near-term market reaction is clear. There has been a rally on Brazil's asset price across the board. Even though we have the case of the corporates that are independent enough to have their own ratings, but the fact of the matter is that the sovereign rating is at the basis of the pyramid of assets. So this improvement of stats has implications across the board. And this has expressed itself in the, as I said, in the asset price rally in the last few weeks, and there is more to come, most likely. Another implication, of course, has to do with good news for the currency, because as there is the likelihood of higher attraction of capital. By the way, the fact that we have the two major rating agencies established Brazil as investment-grade country, this has allowed Brazil to enter into the screen of several institutional investors who are constrained only to lend or to buy securities from countries who have at least two ratings. This is a key important aspect. And I believe the news regarding the currency will come in a very good time, as Brazil will be changing the position with respect to the balance of payment and current accounts. A third implication that I'd like to highlight is more of a general nature. On top of everything that has been said about the template that Brazil can enhance in terms of good macroeconomic management, there's also the fact that with Brazil, 88% of the region's total sovereign debt enjoys at least one investment-grade rating. This is good news for the region. 74% of the regional output in exports and 64% of regional investment originates in countries with at least one investment-grade rating. This is to give a magnitude of the relevance of this shift in the Brazilian case, having consequence for the region as a whole. Well, let me move to my first key message. Lisa and Nancy have both referred to the objective indicators regarding ability to pay. I will not repeat that. I will stress the willingness to pay side. Quoting Lisa in one of her press releases, the upgrades reflect the maturation of Brazil's institutions and policy framework, as evidenced by the easing of the fiscal and external debt burdens and improved trend growth prospects. I would dare to say that in Brazil it happened something that also took place in Chile. We had a political transition, a change of parties, without abandonment of monetary responsibility and commitment with public debt reduction. This has been consolidated, particularly as stabilization dividends in terms of higher investments have been proved concrete. And we should recognize that those dividends from stabilization might have been underestimated by many analysts. Fact of the matter is that, as been highlighted, there is a story worth of attention recently on investment in corporate finance. Investments have been growing at a high rate for the last few years, and the potential GDP growth has increased. By the way, Brazil, for good or bad, had its time for Chinese rates of growth during the process of urbanization. It doesn't make any sense to try to replicate and imagine that the Brazilian rate of growth has to be compared with the Indian or the Chinese. These are different points in time and history. But anyway, the potential rate of growth are going up as the investment rates as a proportion of GDP have been going up as well. And the measured productivity, total factor productivity is showing this. It's running currently at the rate of 2.1% per year, which is, with nothing similar in the recent 30 years of the Brazilian economy. And my point is that these stabilization dividends, as expressed in the higher rates of investment, are the results of a process that was built gradually. If one takes into, let's give a look at the 2002 confidence crisis. Sudden stop, flight of capital, soaring exchange rates, inflation expectations going up, seizure in public sector finance, the country on the brink of default, was fiscal in nature. In order to understand what happened with the country since then, one has to take into account both backward and forward. To some extent, that crisis was the second dip of the 1998 crisis because public debt had increased substantially since then, since 1998, partially because the government was obliged to accept a shortening of duration of the debt and a high degree of exchange rate indexation in order to keep avoiding default. And this in a context of simultaneous monetary and balance of payments adjustments that prevailed during the second Fernando Henrique Cardoso mandate. The new fiscal structure that was then built at the very late stage of the process, it must be recognized, that is the fiscal responsibility law, the debt renegotiation that led to some control of the process of indebtedness. These structural changes had not had time enough to alter significantly the dire straits of debt sustainability of the time. But anyway, the crisis of 2002 was also a crisis of lack of confidence about the future, about the maintenance of the policy framework, because the memory of a long series of policy shortcuts, silver bullets, packages of policy surprise since the 80s was still very fresh. And the political transition with stability in those fiscal and monetary policies, this transition was deemed to be appropriated by the private sector. And it came on gradually in the sense that several tests were necessary. Let me cut short a long story, even though it's one that is very enticing for myself to develop upon. But the fact of the matter is that the fiscal announcements in the beginning of government Lula surprised favorably, and they were kept. So primary surplus have been kept since then. We had the inflation targeted regime was submitted to a severe stress test in 2004, and the response was appropriate. And so, little by little, the confidence was built on this basic stability, and this has led to a decrease in the risks associated to long-term investments, and this is what explained ultimately this, good development, recent development of the investment rates in the Brazilian economy. It is an intermediate point, and that leads me to connect with my third point, because some headwinds are coming, obviously. Lisa and Nancy have already spoken about how the economy the demand is running too fast, which is natural, is the outcome of the evolution of credit and of investment itself. But the economy will inevitably be cooled in order to accommodate to the potential rate of growth, particularly because given the context of rising food and oil price, the combination can be explosive, and that's why the monetary policy has entered a new tightening cycle. Most of the estimates talk about 200 basis points, which is something anyway dramatically smaller than the typical, the typical shocks, monetary policy shocks of the past. And if I were, each one of us here has already established his, both Nancy and Lisa, their set of items for an agenda for reform. I would, if I were to have the privilege, I would nominate one. I would select one, which is to review the fiscal structure. Because the fiscal structure, the current fiscal structure has EU'd the most important thing, that is a debt trajectory downwards. But, of course, there are some features that deserve, and maybe it's about time to review. Basically, the fact that probably Brazil should gain a lot by increasing budget flexibility, because the budget rigidity in the form of mandatory expenses and the revenue earmarking constrain the room for maneuver in the event of adverse developments, as they might come in the near future. Secondly, we have a heavy tax burden and a cumbersome tax system. And this implies that we have a tax system that is still a drag on the private sector's ability to grow faster. Third, rebalance the policy mix, as has been said by both Nancy and Lisa. The Brazil's current policy mix, with rising fiscal spending and world high interest rates, is a combination that is suboptimal. In this, it has worked so far, but if Brazil applies tighter fiscal policies constraining expenditures, this would relieve a little bit the burden put on the shoulders of the monetary policy makers, and ultimately, if not now, but most likely it will take place in a new government, address the Social Security trends. In a nutshell, investment grade is great and deserved news for all that has been said. But it is an intermediate point, not a final destination. There is still plenty of room for micro and macro structural reforms. Thank you.
Thank you, Ottaviano. We have almost 20 minutes for a discussion here, and I would like to open the floor. I would like to ask if people from the congressional staff have, because I know some of them will have to go back to their activities. If some of you have a question, I would give you the floor first. Yes, identify yourself, please.
I'm not familiar with the details of the report, but I could talk a little bit about in terms of, I think, what you've seen is with the stability, macro policy, stable policy overall, low inflation, et cetera, the incentives to be moving into the formal workforce are coming from are really from both sides, and I think the capital market is playing a role in that, in the sense that with low inflation, et cetera, all of the stability, banks have become more comfortable extending credit. And there are the issues of access to collateral, changes in rules, bankruptcy legislation that have gone and played a very important role to that end. But the overall environment makes companies are willing to, the high tax burden that has been discussed plays a role in pushing some sectors being formal entails a lot of costs, tax costs. There are labor market, formal labor legislation, et cetera. But under the environment, the costs of being informal, evasion, et cetera, are falling because you're getting access to credit either from a bank that you didn't before. In order to do an IPO, the bulk of the IPOs that have occurred in Brazil have been under the stricter corporate governance requirements on the stock exchange. So you have to be formal, and you have to be buying from formal suppliers and selling to formal customers. And I think that's the part of, in the IPO process, is we know that it has, it has pockets of exuberance everywhere. But what it's done, it's creating more formality. More companies are going formal, and you can see it you see it through the companies themselves. You see it through the government's tax revenues. You see it in the indicators in terms of the share of jobs that are that are actually occurring in the formal economy. And that's, to me, one of the very encouraging signs. The informality is still very high, and there are a host of challenges. Bringing down the tax burden, making it simpler, changes in labor legislation, ideally, as well. There's a whole host of things. But what you're seeing is an important trend that's moving in the right direction.
Yeah, I'd like to remind you, it was President Lula himself that recently I read talking about this issue, and President Lula can be very candid about those things, and he said, sometimes to invest in Brazil is to be punished. I mean, it has to do precisely with the complexity of the tax burdens, et cetera, et cetera. So the question is, the issue is very present in the public debate. Ottaviano,
if I just add something, the role of the payroll loans has been quite important in that regard. It has, generated an incentive for both employers and employees to formalize. In fact, I believe that there is a depiction sometimes of the First Monday Government Lula as devoid of some structural reforms. But when one takes into account some financial innovations that were implemented at the time, they bore fruits, such as this, an improvement in the property rights associated with alienación fiduciaria, which has underlined the boom in real estate and so on. There was a macroeconomic agenda that was initiated in the previous government, and that was kept and developed, particularly during the period of Palocci. By the way, by Constance, I worked with him, so I have a natural tendency to see it as particularly. But it's true. There was an agenda that was implemented, and the results are coming a little bit as soon as the economy was set up to grow.
would you like to say? Nancy.
Just to add 2 points on this. First, for Latin America as a whole, these are not Brazil numbers, but the World Bank did a survey of what are the most important obstacles to doing business. And it turns out that 53% of firms cited obstacles related to the tax and regulatory environment as the biggest obstacles and the things that drive companies into the informal sector, or alternatively, drive them into resorting to corruption. That's the other way you deal with the environment. So it is a shared problem. If we look at Europe, we have 10 countries that have joined the European Union. They were transition economies. They had the same kinds of problems: very high corruption, very high informality, and in the process of joining Europe, they had to do deep reforms to their legal, regulatory, and tax systems. And if you look at their indicators, they have improved dramatically in the process of joining Europe. So the way I think of this is, it would be helpful if the region figured out a way through the integration process to try to help countries address this problem so that each country isn't doing it alone. I don't know that this region is ever going to want to create a European Union, a European Parliament, and a European Commission. But I think a multilateral approach where you have sort of a voluntary acceptance of a set of common standards seems more doable.
Arturo Porzakanski, American University.
Thank you. The Lula administration has come a long way in terms of increasing transparency about the government accounts, enabling the rating agencies, investors, researchers, whatever, to know what's going on in terms of government spending, revenues, debt, assets, and so on. But one thing it has not done is given the green light to the IMF to publish the staff reports on Brazil.
folks would always prefer to have the IMF reports public. This is, for those who also don't know, to put in a broader perspective, it's not that it's just a policy decision of the Lula government. Brazil's IMF Article 4 reports have never been public, okay? So that it is a policy decision, but it's one that has transcended all governments. We mentioned this, obviously. We Standard & Poor's find the IMF reports extremely useful, and I think, Arturo, your point is well taken. I think further push towards this is something we would welcome. To put on the other hand side, Brazil is considered by the fund one of the more transparent countries, certainly in Latin America, in terms of institutions, et cetera. An example of that is that the IMF does these the ROSC reports. I forget what that exactly stands for, but it's an assessment of. But they have data ROSCs, but they also have fiscal ROSCs, and Brazil scores extremely well and publishes its fiscal ROSC. So there's somewhat of a counterweight, but clearly, we would, very much welcome an initiative on that front.
Let me just go back to my old self for 1 second. I miss from time to time being a journalist, and ask the question that I would ask. You know the full content of what that report says? Do you, people in the markets, have access to that? Or it's really you don't know certain things?
That report is a confidential report. And that is the policy stance since I have covered Brazil through governments. It's a confidential report.
You want to say something?
Yeah, I have no longer access. I read a couple of them.
What? Were they good?
Arturo, have you read any one of them? They're good, but they are essentially very close to what, market analysts, there is nothing, let's say, extraordinary. But there was a reason of political economy. I can disclose this, because given the dependence, given the fragility of the Brazilian economy at the time, there was a political economy aspect, because given the implications as far as markets are concerned, the assessment and evaluation of this document might, be a weapon in other areas. But now the landscape has changed. I believe sooner or later we're going to have. But don't get that excited, because they're very good, top of the line, but they will not add much relative to what you read in your own reports. That
so some of you don't know, but Arturo was for many, many years a bank executive and analyst for banks in New York, and he followed all the debt renegotiations, very much knowledgeable in Brazil. And actually, I interviewed him in February 1999. He was the first, and for a while, the only person who predicted in 99, when the Ministry of Finance in Brazil was expecting a contraction of 4% of GDP, to tell that Brazil was actually going to grow that year, and which indeed happened. So what you saw here is a little bit of insight.
Let's say that he scored even better than the IMF.
Howard, we are there.
With all this good news coming out of Brazil, the S&P rating and the oil discoveries and so forth, Brazil will clearly play a bigger role politically and internationally as well. And I wonder if it's fair to ask the ambassador, since he's present in the room, how all of this economic good news will be translated by the monarchy into political and diplomatic influence globally.
Mr. Master, if you want, could you please come here and join us, and because we are taping this, so you have access. That's great. No, we are not. We are. Ambassador Antonio Patriota.
Thank you very much. The first reaction that occurs to me is to say that part of the economic good news is already a result, a consequence of some of the initiatives that we have taken in the foreign policy domain. It was very interesting for me, for example, to be a participant in last year's Miami Herald Conference in Miami, where they look at the region. And the point was made that Brazil was particularly well placed to withstand the economic turbulence that had started last year and now has become more acute, because it had diversified its relationships, sought new partnerships, and rather than relied too heavily on, for example, its relationship with the United States. So I think the foreign policy deserves a little bit of credit as well for the good news that's coming out of Brazil on the economic front. The two things go together. Now, of course, as we maybe undergo what has been described today as a quantum leap, or these milestones, and overcome some of the traditional bottlenecks that we've had to confront economically in the past, a new horizon appears for us to translate into perhaps even bolder or newer initiatives internationally. But I think what we will continue to see is continuity to a certain degree. Many of the seeds that have been planted will start to produce effects, and there have been many new initiatives under the Lula government, as you know, whether you look at the emphasis on South American integration. And if I may here, I'll just comment very briefly on Nancy Lee's insistence on integration. There are different ways and different geographic conceptions of integration. One that we've been working very intensely on, and where there is already a parliament, for example, is Mercosul. And then we've had last month in Brasilia a UNASUL summit, which brought together all the leaders of the South American countries. So that is proceeding at a very accelerated pace. Whether one looks at, for example, the IBSA forum, which brings together India, Brazil, South Africa, and has already produced a number of results, whether on the trade sphere or the political sphere. For example, the three countries were invited to the Annapolis conference last year here in Maryland to debate Middle Eastern peace, and I think it's because they came together and they adopted joint communiques that expressed positions on the Middle East. The three countries, of course, having good relationships with both the Arab world and Israel is one of the reasons why they were invited and why they became, well, a participant in a process that historically has been more circumscribed to countries in the region or the permanent members of the Security Council or the Quartet. So I think in answering your question, of course, new possibilities will arise, but I think what we will see is continuity and maybe the enhancement of some of the initiatives that have already begun. To mention another interesting initiative here today that is related to the financial world, the BRICS acronym started in Wall Street through Goldman Sachs, but has now been translated also into a political acronym. This year in Russia, the four foreign ministers of the BRICS countries came together, adopted a communique, and established an agenda for enhanced dialogue and cooperation. There will be a finance minister meeting of the BRICS countries in Brazil before the end of the year, along with the yearly ministerial meeting. So just some of the new initiatives on the horizon. Thank you. I think I should go back to my seat.
Yeah, thank you very much, Mr. Ambassador. Jeff.
Yeah, Jeff Hornbeck, Congressional Research Service. I have a question for Nancy, and it's really a follow-up to what the ambassador was saying. I was curious, I was thinking that, one of the major policy goals is pursuing an economically meaningful regional integration, which should be on the agenda. And I was curious, in your mind, what is the implications for that for Mercosur and Brazil's role as a leader in forming Mercosur over the last 15 years? What do you really saying on that, if anything?
Well, I use the words economically meaningful advisedly because there are lots of ways to integrate. Politically focused integration is extremely important, but if you're trying to actually address some of the compelling economic problems in a region, no matter how you define it, you really have to try to make progress on some of the particular shared problems, shared economic problems. So that means that when you have differences over trade, what you're trying to use your integration vehicle for is actually to resolve those differences. I think if you look at NAFTA, for example, there are economic differences on trade, and they're difficult. But I think the way you have to judge the success of the model is whether it delivers on disputes on those kinds of economic issues. Mercosur has had some difficulty in resolving disputes. I raised NAFTA because there's been some difficulties in NAFTA. I don't want to imply in any way that it's easy, but I think you have to judge economic integration models by the economic results that they produce. And the other point I was trying to make is that if you have a good regional integration model, it produces a lot of economic results. It makes a big difference to growth. I think if you look at not just the European Union, if you look at East Asia, which has a totally different integration model, but it has clearly generated a very substantial increment to growth. In the East Asian case, you have a model which is sort of a bottom-up model that's focused on facilitating private investment and the cross-border production sharing that investment generates. So that model is focused on infrastructure, making customs systems work properly, trade facilitation. That's been very important. And it has produced results. The European model, as I've said, is a much more formal process. But my point is that the test of the integration model has to be whether it's generated results. I think part of if you look at the NAFTA integration model, I actually think it's generated very substantial results for Mexico as well as the United States. There are other people who debate that issue, but that is the right test. It has to do something for growth. It's got to do something for income convergence. And the last thing I would say is that if you judge the East Asian model and the European model by income convergence, that is, are the poorer countries in the region converging on the income of the high-income countries? The answer is yes. And that is also the kind of benefit you can get by a good integration model. I think it's generally acknowledged that the economic results of Mercosur have fallen short, and that's why there's a lot of discussion on how it should go forward. And I think a lot of discussion among Mercosur countries on how it should go forward. And I think that's the right focus. I think the economic results of that agreement should be the principal. Well, as an economist, I think the economic results ought to be the principal goal, but I think it needs to be at least as important as the political objectives of Mercosur.
One more? Yes.
Thank you. My name is Pablo Barreira, I'm with WRI, and I would like to ask an open question about integration as well, maybe to Nancy. About the integration that you are talking about, I think you've heard about the initiative for the integration of regional infrastructure in South America, the IRSA project, which wants to integrate South America through physical means, which will eventually turn into economical and political integration as well. And I just wanted to hear what you have to say about IRSA and given its huge environmental impacts for such a colossal project. And after that, a second question would be, what other option would you give? Given that you have said that Brazil should do a critical leadership, has a critical leadership in this moment, what should Brazil say?
I think the whole IRSA effort is exactly the kind of thing that the region ought to be doing. I think a regional infrastructure strategy is critical. And again, if you look at other regions, certainly Europe, the regional infrastructure strategy was critical to Europe's integration and to its growth. It is very difficult for a variety of countries to get together with a whole bunch of infrastructure projects and then figure out how they all fit together and which projects are priorities. But I think it's well worth the effort if that is possible. If you also look at European aid, most of it was spent on infrastructure, and that is, I think, by most people's judgment, the most effective part of the very large European aid spending. So, for institutions like the IDB, I think that's exactly the kind of thing the IDB ought to be doing: is bringing countries together under its auspices as a regional organization to try to hammer out priority projects. As I understand it, IRSA has not yet generated an integrated infrastructure strategy, but it has identified a number of priority projects. And because the critical Amazon region is obviously right smack in the middle of the of South America, and therefore dealing with those difficult environmental issues is critical. That slows things down. But I think that's inevitable. In some sense, Europe didn't have that problem. Maybe it was easier for Europe. But I think for the IDB ought to be as ambitious as possible in using its convening power, its technical power, its advisory capacity with respect to the environment and other issues to try to help countries form that regional infrastructure strategy, both transport and for ports, which are a supply bottleneck now in Latin America. There's lots of data out there that says that if you import something from China, in many cases your transport costs are actually lower than importing something from South America. So that's just an issue that the region has to deal with.
Well, since IRSA is housed at the IDB, I would invite Italiano to say something.
The Secretariat of IRSA is in the IDB, and it's under my vice presidency. So I'm the... let me tell you two things. First, the initiative was built as a means to congregate, to put together several institutions that otherwise would work on a separate way. So by pulling together not only the IDB but also other institutions, we are raising the bar as far as environment standards and any other standard that you can take. We are avoiding a race to the bottom game that might ensue if we're not for the presence of IRSA. This implies cost for the IDB. The IDB uses part of its net income to sustain it. Second point that I'd like to make is the following. You hit a very important aspect, which is the careness with the environmental evaluation of all the IRSA projects. What we have done is we have invested in preparing a methodology, and we are running throughout the range of clients, organizing workshops so as to persuade our clients in the region to adopt those methodologies. And I can assure you that these methodologies lead certainly to an upgrade in standards in some cases. In some other cases, the advance has already been relatively well, but we're trying to homogenize to the top. And a third aspect is the following. The IRSA is maintained as much as we can as a technical work, because the idea is to leave there the heritage and leave there the memory for whenever it becomes feasible to push ahead with the agenda. Just to give you an open example, we have several projects interconnecting Colombia and Ecuador. We have several projects, Paso de Fronteras, connecting Colombia and Venezuela. We have several projects connecting all the countries, but the willingness to push ahead or the conditions differ. But at least any of the major actors in the region knows that we have the memory, we have the projects, and we know what to do. When time comes, the IRSA will be ready to provide the ground for major advance.
Thank you, Otaviano. With that, we will have to close. I would like to remind you, though, too, that we have at the Wilson Center at the Brazil Institute a report on a conference we had on January the 16th, precisely about infrastructure integration and protection of the Amazon. It's available online. I wanted to thank Lisa very much, Nancy, Otaviano, for accepting our invitation to be here and to enlighten us about this topic. I would like to a special thank you to Ambassador Antonio Patriota, who gave... Yes, sir.
Because if you leave outside the dimension of the democratic regime also that involved, and we're talking here about economics, but you also have to look at the impact that this would have had and how it has stabilized the southern cone of South America. It has a democratic clause, only democratic regimes can participate. I don't see anything comparable in East Asia, whether it's ASEAN, whether it's other Vietnam, whether it's APEC. So I just wanted to bring in that in.
Well, and I thank you for that, and I thank you, the friends from the Brazilian Embassy, and all the friends of the Wilson Center, the Brazil Institute. Thank you for all our Liz, Alan, and Matthew, John, Heidi, for your efforts, Kent and David. We at the Wilson Center see ourselves as a kind of an energetic sort of institution, but with the specialty of producing light more than heat. So thank you. Stay tuned on our website and be back here on the 27th if you're interested in the topic of the food crisis. Thank you very much.